The Central Bank of Kenya has announced the introduction of new banknotes to replace defaced currency currently in circulation. Now, according to Central Bank Governor Kamau Thuge, the new notes will be printed by a German-based money printer following the exit of De La Rue from the Kenyan market. Now, Thuge, who was speaking during the Post-Monetary Policy Committee meeting, also said that the Central Bank of Kenya will be looking to inject funds into the banking system to ensure that the introduction of the base lending rate trickles down to consumers. Our very own Jimmy Mbogo has more.
5 years after Kenya introduced the new generation banknotes, the central bank has made significant changes to the legal tenders, saying the move is aimed at maintaining standards as dictated in the constitution. The changes will affect 50, 100, 200, 500 and the 1,000 shilling notes, with the 1,000 shilling note being given priority, with the governor clarifying that the changes are an upgrade of the previous ones and will circulate alongside those previously issued.
The notes that we have, they're getting old, and therefore we need to get new notes. That's really the reason. And the reason why we started with the 1,000 notes was that they could be a stock out of those notes actually we are projecting there could be a stock out in around July, August. And so it was really necessary that we get new notes as quickly as possible. We've started with the 1,000, but the other ones will follow.
In the post-MPC briefing, the governor highlighted that the shilling has remained stable compared to other regional currencies. The stability is pegged on easing inflation and diaspora remittances, which have shown notable increase, with inflows accelerating by 13% over the last 12 months to June. In the first 6 months of this year, remittances saw a 17% rise in inflows, majorly from the United States, which contributed between 55 and 57% of the total inflows. The governor further arguing that despite recent credit downgrades, the CBK has yet to observe any weakening of the shilling. This coming in the wake of a 25% basis point reduction of the lending rate from 13% to 12.75% to increase liquidity in the country, with the governor outlining that the Monetary Policy Committee MPC framework will ensure that the lowered CBR rate injects more liquidity to stabilize the interbank rates.
What we'll do is, in a sense, inject now more liquidity into the financial system to make sure that the interbank rate comes down to around that 12.75 rather than the 13%. And I think that way we can now we can have that transmission of lower rates to the commercial banks.
While addressing concerns over falling demand for Kenyan debt and bond under subscription, Governor Thuge emphasized that the CBK is in talks with development partners for additional external financing.
This year we are projecting domestic financing of roughly 413 billion shillings, and the more we can, the more external financing and affordable financing on concessional terms, if possible, the more we can get of that, then we'll be able to reduce domestic borrowing.
Kenya's usable reserves now stand at 3.8 months worth of import cover, which CBK considers sufficient. Jimmy Mbogo, Citizen TV, Nairobi.